Volkswagen Group, one of the largest automakers in the world, is at a crossroads. Reports of potential factory closures have surfaced, sending shockwaves across the industry. The question on everyone's mind, is this a sign of deeper trouble, or a strategic pivot for a more sustainable future? In this video, we're diving deep into Volkswagen's current challenges, how they got here, and what's next for the automotive giant.
Volkswagen Group isn't just another car company. They operate under a diversified multi-brand business model, which has helped the company weather storms and maintain its status as a global leader. The group owns some of the most prestigious automotive brands in the world, including Porsche, Audi, Bentley, Lamborghini, Bugatti, and Skoda, among others. This diversity allows VW to target different market segments, from affordable cars to ultra-luxury and performance vehicles. Volkswagen's business strategy revolves around economies of scale. With over 120 factories globally, VW can mass-produce vehicles at a lower cost per unit compared to smaller automakers. Their modular Querbokasten MQB platform, for example, allows them to use shared components across multiple models and brands, streamlining production and reducing costs. The company also operates a strong vertical integration strategy where they control much of their supply chain. From owning battery plants to developing software solutions, VW is aiming for more self-reliance, particularly as the industry shifts toward electric mobility and autonomous driving. But Volkswagen is now moving from a traditional internal combustion engine, ICE business model, toward a future dominated by electric vehicles, EVs. They're investing billions in new battery technologies, charging infrastructure, and digital services, aiming to build out an ecosystem where VW customers are locked into a vertically integrated experience, from charging their cars to accessing VW's software-based services. These recent developments have raised serious concerns about the future of their manufacturing operations.
In an era where automakers are being pushed to innovate faster than ever before, rumors of potential factory closures in Germany have cast a long shadow over Volkswagen's future. What's driving this decision? Declining demand for electric vehicles in Europe, increased competition, and the global shift towards sustainability are all at play. Volkswagen is grappling with rising production costs and supply chain disruptions. But this move is more than just cost-cutting. It signals a strategic shift in how VW plans to stay competitive in an ever-evolving industry. No conversation about Volkswagen would be complete without addressing the dark cloud that still lingers over the company, the Dieselgate scandal. Back in 2015, Volkswagen was caught installing illegal software in millions of diesel vehicles to cheat emissions tests. The scandal cost them over 30 billion euros in fines, recalls, and legal fees. But more than that, it severely damaged the trust consumers had in the brand. The fallout was global, with regulators tightening emissions rules and consumers becoming more environmentally conscious. VW had to pivot fast, pushing into electric vehicles partly to rebuild its image as a green automaker. However, Dieselgate wasn't an isolated incident. Just a few years later, the company faced accusations of falsifying fuel efficiency data for some of its models in South Korea. These issues haven't crippled the company, but they certainly added roadblocks to VW's ambition of becoming a leader in electric mobility. So the question remains, can VW fully shake off its tarnished reputation? Or will these scandals continue to haunt them as they try to forge a new path in the EV era?
Despite massive investments in electric vehicles, Volkswagen is facing a reality check. In Europe, the demand for EVs is growing, but at a slower pace than expected. This has led to overproduction and stockpiles of unsold EVs, forcing VW to reconsider how they manage their supply chain. While the company aims to electrify 80% of its fleet by 2030, they're caught in a balancing act between keeping up with competitors like Tesla and managing costs effectively. All this whilst competitor Volvo reverses its plan to sell only electric cars by 2030 as demand falls. Could these potential factory closures be a reaction to the short-term EV market slowdown, or is it part of a longer-term strategy?
Volkswagen has been aggressively pursuing electrification and sustainability goals, committing billions to transform its vehicle lineup. They've launched successful models like the ID.4 and ID. Buzz, aiming to challenge Tesla's dominance. But as CEO Oliver Blume explains, success takes planning, and the road to transformation is long. Volkswagen's strategy mirrors the philosophy Blume used to reshape Porsche, a balance of precision, pragmatic decisions, and a clear long-term vision. VW's goal isn't just to adapt to electric mobility, it's to lead the charge, with a vision that extends beyond just EVs.
A closer look at Volkswagen's latest financial results. In June 2024, the company reported 83.34 billion euros in revenue, a 4.1% increase year over year. On the surface, this looks like a solid result, especially in the face of global economic pressures. However, when we dive deeper, things aren't as rosy. VW's net income came in at 3.27 billion euros, which is a 3.54% decline year over year. Even more concerning is the drop in their diluted earnings per share, EPS, which fell by 4.17%. This indicates that profitability is being squeezed despite higher revenues. The company's net profit margin also shrank by 7.33%, down to 3.92%, signaling tighter margins and rising costs, possibly due to higher energy prices and increased production costs related to their EV push. One of the most alarming figures is the 793 million euros net cash outflow, a 342.51% decline compared to the previous year. This suggests that VW is burning through cash, likely due to high capital expenditures in their EV and battery production initiatives. Although such investments are crucial for future growth, they also put immediate pressure on the company's liquidity. Volkswagen's cost of revenue also surged by 5.28%, showing that operating expenses are rising, possibly due to inflation and raw material costs, which have hit the EV sector particularly hard. Operating income, however, still managed to grow by a modest 1.96%, showing that VW's operational efficiency isn't entirely lost. But there's a clear need for the company to address its rising costs and shrinking margins. On the stock market front, VW's share price has taken a significant hit. As of September 2024, the stock has dropped by 20.30% year-to-date, sitting at 89.96 euros, down from a high of 115.50 euros in May. This decline reflects investors' growing concerns over the company's ability to navigate the transition to EVs profitably, amid broader economic uncertainties. These financial struggles underscore the urgent need for Volkswagen to streamline operations, possibly through factory closures and cost-cutting measures, as the company braces for a more competitive, lower-margin electric vehicle market.
Under Bloom's leadership, Porsche saw exponential growth, doubling its sales revenue and operating profit. This wasn't by accident. Porsche invested early in electric mobility with models like the Taycan, proving that the right combination of strategy, courage, and innovation can lead to extraordinary results. Bloom's formula for Porsche's success: strategic foresight, precise execution, and a relentless focus on customer experience. Now, Bloom is bringing that same blueprint to Volkswagen Group. The goal? To steer VW through these turbulent times by focusing on long-term value rather than short-term gains.
Volkswagen is committed to being a leader in the electric mobility space, aiming for 80% of its vehicle sales to be electric by 2030. But the journey to electrification is not without hurdles. The current slowdown in EV sales has prompted VW to reassess its production strategies, including possible factory closures. However, Volkswagen isn't backing down from its electric vision. Alongside its flagship ID series, VW is investing heavily in battery technology and charging infrastructure, ensuring that its EV fleet not only meets but exceeds consumer expectations.
But Volkswagen's sustainability efforts go beyond electric vehicles. Like Porsche, VW is exploring eFuels, synthetic fuels that could keep internal combustion engines relevant in a carbon-neutral future. This dual approach ensures that Volkswagen remains adaptable, catering to both electric vehicle enthusiasts and traditional car owners. Volkswagen has also set ambitious goals for carbon neutrality by 2050, with a firm focus on reducing emissions across its entire value chain, from production to end-of-life vehicle recycling.
In the race for electric vehicle supremacy, Volkswagen is up against formidable competition, particularly from Tesla. While Tesla's streamlined, software-driven production model has given them an edge in EV manufacturing, Volkswagen is leveraging its decades of expertise in quality, engineering, and brand loyalty. Volkswagen's challenge now is to accelerate its EV strategy while maintaining profitability and brand identity. The potential factory closures are just one step in a larger effort to optimize production and stay competitive in a rapidly changing market.
As Volkswagen Group faces the prospect of closing factories, the world is watching to see how they'll navigate these challenging times. Will they lean into their electrification goals with more efficiency? Can they outmaneuver competitors while maintaining their legacy of quality and innovation? One thing is clear, Volkswagen is undergoing a transformation that will define its future for decades to come. Under Oliver Blume's leadership, and with the lessons learned from Porsche's success, VW is well positioned to emerge stronger and more resilient. But the road ahead is long, and only time will tell if they can continue to lead the pack. The race for dominance in the automotive world is more intense than ever. Volkswagen isn't just competing for sales, it's competing for the future. With factory closures looming, strategic pivots in motion, and a bold vision for electrification and sustainability, Volkswagen's next move could define the future of the entire industry.
What do you think? Will Volkswagen overcome these challenges, or are they facing a roadblock that could derail their future plans? Let us know in the comments below. And don't forget to subscribe for more insights into the future of the automotive world.